Welcome back. We had a big rout in global equities overnight. The US indices were down 2 to 3%. European indices slipped 3 to 3.5%. To some extent, the Indian markets preempted the fall. Yesterday, the Nifty and the Sensex were down about 1.5%. But this morning, the SGX Nifty is suggesting that it still could be a lower start. So that said, the cut on the SGX Nifty has narrowed. Maybe an hour back, the SGX Nifty was lower by 60-odd points. Anuj is here to fill us in on how he's viewing the trade setup now. Hi, Anuj.
Hi, Rima. So, not to a large extent, actually to almost every extent, we had preempted the US decline between 230 and 330 yesterday. I mean, the way market collapsed yesterday, 230 to 330 was almost a near breakdown. It was a bit of a reality check for US market. I mean, did make this point yesterday as well, that the US market reaction previous day was quite mild compared to the hawkishness of the US Fed. So I think yesterday was perhaps more of a mature reaction. But look, this is not about day trade, which could work out either way. This is about whether the US market has started a sharper correction led by the NASDAQ, and will India stay decoupled from the US? I think that is the bigger call that one needs to take here. I mean, if you look at the trade setup, it's clear that a lot of market participants were thrown off guard yesterday. And this is the problem of a market which is not hedged. Yesterday, the market was completely on the long side. And yesterday was a shakeout. If you see the index futures, they were selling. The premium came down. The long short, if you see, has come down to 54% now. And the put-call ratio has fallen to 0.88. Now, at some point during the day today, the market will become oversold if, the selling continues. Maybe that's where you see some buying. But for a positional point of view, the fact that the Nifty effortlessly closed below the 20-day exponential moving average now tells you that it's sell on rally till that 20-day exponential moving average is reclaimed, which is now somewhere around 18,490, 18,500. And it's possible that you test the 50-day exponential moving average, which is somewhere around 18,194 on the Nifty. But it's possible that you see an intraday rally if after the first hour you protect the decline and the first hour low hold. So intraday rally is possible, but that will be vulnerable to be sold into somewhere around 2 to 30 when US futures, my senses, again would start to show you red. The Bank Nifty is the index to track because that's remained the strongest index. It closed below the nearest moving average, the 10-day exponential moving average yesterday. But it's still an index where you would want to give benefit of doubt because yesterday was expiry as well. So maybe if the market has to recover, the Bank Nifty has to put its hand up because IT will struggle. So the Bank Nifty's larger trend still remains buy on dips. But overall, the yesterday's red bar clearly is a big one and something that, you should give importance to.
All right, Anuj, thanks very much for that. So that's basically the setup as Anuj sees it. Well, the next corporate we are speaking with is Nava. This was earlier known as Nava Bharat Ventures. The company step-down subsidiary, Mamba Collieries Limited, MCL, has been pursuing international arbitration against the Zambian Electricity Supply Corporation. It's called ZESCO for outstanding receivables. The arbitral tribunal has issued a consent order, and as per the award, Nava's subsidiary will receive the outstanding and overdue arrears aggregating to about $518 million from this Zambian electricity entity. The news came in the last hour of trade yesterday. The stock went up some 8.5%. We have the management of Nava now joining us. Sultan Beg is Chief Financial Officer of the company. Sultan, great to have you with us here. Thank you very much. Is this a done deal or this can go on, to some higher authority? And this arbitration was done where? In Singapore or, yeah?
Good morning. Yeah, maybe I can clarify. Good morning and thank you for having us on the show. This is a consent award issued by the International Arbitration Tribunal based in London, not in Singapore. By means of a consent award, it means that both the parties, MCL and ZESCO, got onto the table, agreed on bilateral terms, how the debt will be disposed of over the next course, and approached the tribunal to issue a consent award. So it cannot be challenged further because the parties bilaterally agreed and reached an agreement and which the tribunal issued in the form of an award. This award is enforceable like any other award under the New York Convention and can be registered in Zambia. And we do not see any challenges in MCL, Mamba Collieries, recovering any money from ZESCO. Because
Sultan, is this money lying in some escrow somewhere, there's no problem getting hands on this money and it'll be transferred? How will this be transferred to you in one shot, or it'll come to you over a period of time?
As per the settlement agreement, it will come in tranches, and ZESCO has agreed that the entire money will be settled to us by end of August 2023. It will come to our designated escrow account. As of now, we are confident that when ZESCO comes onto the table and says that they're confident of paying the entire money by end of August 2023, we do not see any challenges in we receiving money from ZESCO.
Sultan, morning, Rima here. So what will you do with this $518 million of cash or arrears that you get, outstanding receivables? Is there any payout that you need to make, or will you be able to utilize the entire amount? And if yes, how will you do it?
Yeah, out of the 518 millions, about 70 million will go towards the payment of VAT liabilities to the government of Zambia, which we believe that ZESCO will directly pay off to ZRA. And from the balance 47 million, we have an outstanding principal due to the lenders, which has not been paid since about 3 years. So over $220 million would go for repayment of the outstanding overdue principal amounts to the lenders. Balance amount is available with the company, and the board will take a suitable decision when the right time comes for the utilization of the funds, either in terms of the payout to sponsors or conserving cash for further expansion.
So balance is about $227 million, right? Which you can dispose as you deem appropriate.
Absolutely right, Rima.
All right, and would you have to pay any tax on the $227 million that you get? Just trying to understand the net inflow that comes in.
This is net of tax.
Okay, $227 million net of tax. So
of course, there will be a corporate income tax liability on Mamba Collieries on the overall profit. But this is overdue receivables, and we have already been through our taxation year on year. And being in the power sector, we do have a tax holiday.
All right, take that point. And you know, this was a big trigger for you. I remember having these conversations with the company over the last few years, and every time everyone was wondering, you know, what happens to this. And now that it has come and you are assuring us that this cannot be challenged further, August 2023 is when the money comes to you guys. This should be taken well by the street. But apart from this, you also had some land in Hyderabad that you were looking to sell. What's the outlook there?
Yeah, we are in the verge of appointing one of the largest international property consultants to dispose of this land. As you know, this is a significantly very large land parcel on the eastern side of Hyderabad, over 60 acres. So it needs a decent amount of time to be invested by large property consultants in doing the due diligence and reaching out a proper deal. So we are in the process, but we feel taking into consideration the various factors, it will take some time. Hopefully in calendar year 2023, we'll have some outcome of this.
Could you give us a sense of how big the land is? What are the prevailing rates there? What kind of monetization opportunity stands for you?
Size of the land is over 60 acres. I do not want to preempt on the price discovery because of the large parcel of the land and such kind of large parcel not being available on the eastern side of Hyderabad. So I would want to leave the job to the property consultants.
Do you have any capex plans, any requirements for your organic growth?
So we do have intention to expand in the mining and metals business in the Ivory Coast. We have a concession for over 64 square kilometers of land in the Ivory Coast to explore for the manganese ore. We are in the currently exploration stage. Once we reach some conclusion on the mining plan, we can set out our capex plans.
All right, let's talk about business then. The Zambia PLF, what do you think will the steady state PLF for that business be going forward? And even on your ferro-alloys business, I mean, what's the order book like? What's the run rate which is sustainable?
Coming on to Zambian PLF, we've been just through with our major overhaul last year. This year, it will be normal PLF of 85% plus for the Zambian entity. Coming on to ferroalloys, we have significantly occupied the order book for the next few months. Of course, I do not want to comment on the price owing to very short time we have left before we end the quarter.
Do you have debt? What's the outstanding debt after you repay $220 million of those against the outstanding principal?
So I'll classify debt into two parts. On the standalone entity in Nava, India, the debt is just about 100 crores, which is negligible or nothing. On the Mamba College front, the debt is absolutely non-recourse to India, and overall debt as on today is $412 million. Once we get the arbitration proceeds, and we'll be able to retire almost over 50% of this debt, and balance 50%, I think we'll be in touch with lenders to see if we can reach some kind of settlement to restructure the debt to make it in line with the revenue receipts.
What would those revenue receipts be?
Maybe if you could recall, we had a slight downward revision of power tariff with ZESCO. Tariff has been slightly revised down to 10 cents from the current financial year onwards. So we'll have to adjust our debt payout with the receipts.
All right, Sultan, we wish you all the luck. Thank you very much for your time. Great speaking to you.
Thank you so much.
Thank you.
Thank you
So that is the management of Nava. A big rally yesterday, and some more clarity coming in terms of how much money they will receive because of that arbitration award. Mitesh is with us. It's 9:09, so let's get some calls going. Mitesh, what do you have?
Prashant, I'll go with a buy on Piramal Enterprises if it starts getting past 920. Buy then to stop at 904 for targets of 955. All right,
thanks very much. I just want to put the focus now on the oil companies, and this is what we're doing on our market laser segment. The news, of course, has been, we've been talking about it from the morning, which is the windfall tax cut. So on crude, there's a very sharp cut. On diesel, there's a sharp cut. Actually, on diesel, it perhaps, I would have thought, would have been sharper. But it's come down from 8 rupees to 5 rupees. And ATF prices have been, the taxes have been cut as well. Now, why is this important? This was important when the windfall taxes were first imposed 6 or 7 months back. They were important because, it created a lot of uncertainty because it raised the prospect of government intervention in the oil sector once again, in the upstream sector once again. And now that they've been cut very meaningfully, I think they're important again because it sends a very strong signal that the government is willing to respond in an aggressive way to an aggressive fall in crude prices. I think that's the takeaway here. If you remember, when they were first imposed, we had companies come on, we had not more than companies, analysts, etc., come on and raising doubts whether, companies and investors will have to live with these high windfall taxes for time to come. But that doesn't seem to be the case. So I think it's a positive signal from a company's point of view. Two companies specifically which I think get the most impacted. One is ONGC, and I'll tell you why. Of course, for ONGC, the biggest cut comes via the channel of cut in windfall taxes, which have come off sharply. But, it does show that given where oil prices are, that is crude oil prices are right now, which is about $76, $77, around about there, between 75 and 80, and windfall taxes coming down this sharply, it perhaps is possible that the government is okay with ONGC realizing between $75 and $80 per barrel on sales, on oil sales. That's an interpretation, that is a takeaway, but I think it would be fair to go with it. The gap between what perhaps the government is okay ONGC realizing, so, in a way, it also sets a cap. Anything above 80, perhaps 80, 85 things, taxes move up once again. But between this 85 to 70, perhaps 75 and 80, it perhaps could be a sweet spot. The current ONGC stock is pricing in anything between $40 and $50 per barrel. So there is a gap, right? There is an arbitrage. Now all of it will not be filled, but I think, this is a strong and important signal coming in from the government. The second is Reliance Industries. For Reliance, the impact is not so much from crude sales, but it is from the cut in diesel taxes and ATF windfall taxes as well. As I said, on diesel, perhaps things will come off, things will soften more on the windfall taxation front. But even then, with what has been done, I think this is pretty good news for both these companies, upstream companies, where there has been a fair bit of uncertainty because of these windfall taxes. They are there, but they've been cut aggressively to almost in line with where oil prices have come off to as well. So that's, a bit on upstream oil companies. Malu.
All right, take that point, Prashant. Thanks a lot for that. So those upstream oil companies are something that we'll be watching out for. But the other stock that we'll be watching out for is the one which has a lot of momentum behind it. Vahishta joins in with momentumizers and what's on her list today. Vahishta, what are you tracking?
Hi, Mangalam. I'm looking at a fertilizer company today which is called Rashtriya Chemicals and Fertilizers with 75% government shareholding. There is a strong momentum going on in this stock, as you mentioned. The current market price is at 141 rupees, which is very close to its 52-week high of 145 rupees. In fact, the stock has already rallied 5% in the past 5 days. This is to be compared with the Nifty, which was down 1% in the same period, while the stock was up 40% in the past 1 month, and the Nifty was nearly flat. Rashtriya Chemicals and Fertilizer stock is higher than its 20, 50, 100 and 200 daily moving average. In fact, the 10-day average volumes are as high as 131 lakh shares. In fact, just yesterday, it was 296 lakh shares, which is the highest since 24th of November 2022. Let's look at what are the key stock triggers. Number one, upcoming union budget of 2023. Remember, fertilizer is a key focus sector for the government, as subsidy on the urea for FY24 is likely to be elevated. This is expected to benefit companies which are facing some margin pressures. The next is the expectations of Russia to impose an export duty on all types of fertilizers, which is expected to come into effect from the 1st of Jan 2023. While both these points are sectoral tailwinds which are driving most fertilizer stocks in a weak market. This includes the likes of Madras Fertilizers, FACT, National Fertilizers, and RCF as well. Back to you.
Vaishna, thank you very much for that. And there, the opening bell is going to go in just about 5-4 seconds. It's expected to be a weak start in line with the weakness that we've seen in global markets overnight. The first tick on the Nifty down 50.5%, lower by 83 points. It's slightly worse than what the SGX Nifty was suggesting. The Sensex down 290 points. The mid-caps are losing in step with the frontliners. The mid-cap index down 0.6%. The advanced decline ratio has more than 1,000 stocks on the losing side. The biggest knock has come in the IT sector. So the Nifty IT index itself is down more than 1%. It's taking cue from the 3% cut that we had on Nasdaq overnight. So the top 3 losers on the Nifty today are the IT heavyweights, HCL Tech, Infosys, Wipro, and the 5th one is TCS. Across the board, these large caps are down about 1% to 1.5%. So we've seen weakness in IT this morning. The other pocket where there is some amount of pressure are the FMCG names. So Asian Paints, crude prices did rise to $81 per barrel. So Asian Paints is down close to about 1%. You've got some weakness in Titan as well. A couple of financial names are losing ground like HDFC Limited as well as Bajaj Finance. On the gaining side, the big winner is ONGC. This is after the cut that we've seen in the windfall tax. So ONGC has gained nearly 1%. Tata Motors, whereas Vivek was pointing out, come Monday, Tata Motors will be included in the Sensex. So Tata Motors has a bit of a green going for itself. You can also see green on oil marketing companies. So BPCL is up close to about 0.4%. All in all, it's muted start for the Indian markets, down 0.5% on the benchmark indices. The Nifty is holding on to that 18,300 mark, but it's lost straight away 85 points at the open. And mid-caps are now faring far worse.
Mid-caps are faring worse for the second day running, Reema, right now. In fact, as we speak, the mid-cap index is about 0.75% lower. We have nearly 1.5 stocks declining for every stock that is advancing. So the advanced decline is firmly in favor of the losers. The only, gainer of note right now in the broader markets is Nava Limited, up 8% as we speak after an 8% rally that we saw yesterday as well. Remember, we just spoke with the management. They are going to net $227 million after paying off all the dues, etc. The market cap of the company is around 3,300 odd crore rupees, so the street is putting its hopes on that. The one that stands out on the way down is GMM Pfaudler, promoter entity selling nearly 30% stake in the company. That stock's down 10% as we speak as a result of the discount that there is at the price at which the current market price versus the price at which the promoters will sell as well. 12% lower, 13% lower on that stock. SRF is the other one, which is down by about 3.5 odd percent. On the way up, we do have PI Industries, Oil India again gaining on account of the cuts that have come by with regards to the windfall tax. And PSU banks again see profit taking for the second day running. We have Union Bank, currently lower by about 2% after rallying a fair bit in this year and the earlier part of the week as well. Prashant.
It's a 100-point, almost 100-point cut now on the Nifty. Just a few other names before we go any further. GMM Pfaudler, of course, we just mentioned. It's a 15% cut on GMM Pfaudler. to be expected, of course. Infi is down 1.6. It's coming up as the second largest volume-led loser. Yes Bank, which has had a bit of a run, it's down 2% on volumes. SRF, I think got mentioned earlier, 3% lower. Varun Beverages is down about 2.5% at about 1347. And some PSU banks. By the way, I mean, you know, the PSU bank index is down for the second straight session, but you've got these one-off wild movers, right? I mean, look at UCO Bank. No relation to what's happening to the market. UCO is up another 5. And there is Indian Overseas Bank as well. By the way, these two names were up yesterday as well. So UCO is up 5, IOB is up 2, and on volumes. PI Industries is up 2% on decent volumes. And you've got these... Fact and Madras Fertilizer, these fertilizer companies, small fertilizer companies which are jumping up. Fact was up 10% yesterday. Madras Fertilizer is the big one with an 11% pop. And the only reason I'm mentioning that is because it's got decent sized volumes. ONGC was up under 1%, is up over 1.5%. So it's slowly picking up pace, ONGC that is. And Deepak Fertilizer, of course, is the other one along with Nava, which has got news flow, which is reacting in a positive fashion. Policy Bazaar is coming up with some gains as well. It's up 2.7%, 465 on Policy Bazaar. Keep an eye on the standalone refiners as well, right? MRPL, they all benefit because of the drop in the sharp cut in windfall taxes on crude oil. So MRPL, at least on my screen right now, coming up. So 60 points. I mean, we were down 100, we're down to 60. That's basically the picture with 4 minutes of market action. Behind us, there is a bounce which is coming through. Let's look at Reliance if we can, because that is the heavyweight. And is Reliance coming back? Yes, Reliance is coming back quite sharply. So it opened at 25. I'm talking about cash levels here. 25.71 is where it opened. It dropped to a low of 25. Okay, 25.70 around is basically where it opened and made a low. And from there, it's now moved up to almost 2600. And this is what I was saying earlier, that the market perhaps has got help from Reliance, which is the heavyweight, and which has got some tailwind in the form of these cuts, especially for Reliance Diesel and ATF. So that's the one which is kind of leading to this bounce back we are seeing on the market. Almost all of it, by the way, this bounce, at least 15 index points coming in from Reliance Industries, along with ONGC. I think it's helping quite a bit. ONGC, 2 index points, Reliance about 13 now. Sandeep Bhatia is our market master today. He's head of equity India and country head India at Macquarie Group. Sandeep, great to have you with us here. Thank you very much. I mean, if you will, just a quick word on these very sharp cuts in windfall taxes, because when they were first imposed 6 or 7 months back, there were a lot of doubts whether we'll have to live with these very high cuts and whether very high taxes and whether meaningful cuts will come, even if oil prices fall, but they have come. It's a strong signal, isn't it, that the government is responsive. What's your sense?
I think it's a strong signal that the revenues and the broader economy is doing well, which is why the government is able to be responsive. So I think it broadly essentially means that sensible policy is being followed, but also the context is important, and the context is a booming tax revenue kitty. And therefore, this has happened. I genuinely hope that this is followed always across sectors and across cycles of tax revenues. But yeah, welcome, but also the context of a booming tax kitty is important.
Sandeep, morning. Rima here. How are you reading the markets right now, the setup? We kept saying that Indian markets are far more resilient. They fared so much better than the emerging markets. But now there is talk that China is going to reopen. And at least in the near term, it is going to hog the headlines. It's going to hog the kind of inflows, into the emerging market space. Keeping that in context and the fact that we're not done with rate hikes just yet for global central banks, what's the outlook?
I think the outlook is definitely positive if you take a year kind of view. In the very near term, which is December, Jan, we will face some headwinds because of the fact that there's budget around the corner on 1st Feb. There will be intense speculation from the beginning of Jan about where and what will happen. My own view is that budgets come and go. The underlying economy is what matters. But yes, I think India will face some kind of headwinds when the world looks at China opening up. But remember, China will be the last to open up. And if you look at what's happening in China, there's been a big spike in cases. Now, of course, the data is not getting collected, so you won't see the data. And even if some data comes in, it will come with maybe a 2-month lag. So it will all not be a real-time kind of assessment of what's happening in China. But China will definitely not be, the opening of China is not a on-off event. It is going to be a process, and that process will be punctuated by the kind of spikes in infection that China is witnessing right now. Remember, China also goes through the Chinese New Year holiday season in February. So it will actually be quite slow for China in the first quarter of the next year. And even then, after that, I think the world has permanently changed its view on China. And to that extent, India is a structural benefit. And therefore, I think India definitely does well for the next year, 2023. But yes, in the near term, December and Jan, it can get a bit difficult.
Right, take that point. Speaking about 2023 itself, what are your thoughts on the sectors that will do well? And I ask this because in the past, Sandeep, you've liked the IT space, and 2022 was particularly brutal for the IT space. In fact, the index is down 25% at a time, and the Nifty is up 5%. So there you have it at an index level itself, a 30% underperformance there. What does one do? I mean, at what point does it get attractive, or do you continue to stay constructive on this space?
Well, I think the IT sector, definitely has bottomed out, and and we've seen some of the performance come back. The real question is whether US goes through a major recession. Right now, the consensus is, as indicated by the Fed and as indicated also by the inflation cooling off in the US and even in India, that we will see rate hikes, but they will not be of the order of magnitude that we have seen all through 2023. So the worst in terms of pressure due to interest rates is definitely behind us. And I would think between April to June, we'll see the interest rates hike stop across both the Fed and in the ECB. So to that extent, I think the IT sector should be primed for performance from the summer of next year. Definitely, we'll see positive index returns as also come through.
Okay. So, as we sort of wrap this year up and look into the next one, Sandeep, any other pockets where you think there is significant value? In the broader market, right, we've seen this rotation one out of the other, and I'm talking about small sectors, which have all rallied significantly. I mean, the last one was PSU banks. We've had large rallies in defense, although that may be a longer kind of theme. They're taking a bit of a break. Then, of course, much smaller sectors in paper, textiles, hotels. What next, Sandeep?
What next is a good question. I think consumer goods, let's wait and see. We have seen ITC rally. ITC, of course, didn't rally because of a broader consumption rebound. It rallied because the pressure of ESG has waned in 2022. That is not mentioned much as a theme, but the big theme was ESG is no longer as big a factor on stocks as it was in 2020 and 2021. So the consumer goods sector has been a big underperformer. It's been an investor favorite for a long time. A lot of people have had to cut weights there, but still it's an expensive sector. And essentially, it's the broader rebound of the Indian economy. We saw the private sector banks do well, then we saw the public sector banks do well. That shows that the entire banking sector eventually has done well. But the consumer sector has to do much better, and that would be indicated if the rural economy comes back. So let's wait and see post-April. If we see the continued growth momentum that we are seeing spread into the rural sector, the consumer discretionary and consumer staples, most importantly, consumer staples should come back.
Sandeep, the FII ownership in PSU banks, namely State Bank of India as well as Bank of Baroda, is still very low at 8 to 10%, while the FII ownership in private sector banks is a lot higher, 35, 40% as well for some of them. Do you think this can provide a big tailwind, and do you think the FIs will go beyond SBI and Bank of Baroda, which are the two big PSU banks? Your thoughts on this sector?
I think PSU banks, I think FIs will continue to stick with the large banks, also well-managed banks such as SBI and BOB. Whether they go beyond this entirely depends upon how strong this rebound is, whether we see this to be a fire kind of rebound on India. I think the jury is still out. We still don't know whether this will go into 2024 to 27, 29. Then, of course, the entire PSU sector bank can perform. Still early days to conclude that. India has not had such a long cycle ever. The longest growth cycle we had was probably from 2004 to 2007-8, 4 to 5 years max. So if we see a similar kind of cycle come through and maybe even longer going forward, definitely the other PSU banks, the other capex-driven plays can come through. That will have to probably wait till 2023 to come to some sort of conclusion how long this rebound is for India.
We take that point. Just hang in there, Sandeep. You know, we are getting some pictures of the finance minister speaking at the FICCI event. Of course, our team's listening into it and will alert us of important comments that she makes out there. But we don't know whether it's you or the finance minister who brings good omen to the market, because it's a stellar recovery that we've seen from the lows. In fact, the Nifty has recovered over 100 points from the lows, currently just about breaking into the green. And, even the mid-cap index has trimmed its losses sharply, opened with a cut of 0.75% and now sitting with a cut of just about 0.25%. What is powering the Nifty ahead? We have Reliance, which is up 1.5%. So with its might, it has taken that index, it supported that index. And giving it company is the banking pack. The banking index actually took support at the 20-day moving average and has bounced right back from there. 43,500 on that index. The 20-day moving average, of course, is just shy of that 43,200 mark, and that's also the low on the Nifty Bank. The Nifty Bank's also broken into the green, courtesy HDFC Bank as well as ICICI Bank, both of them doing extremely well. So good on the markets right now. We'll continue to track it. It has been a stellar recovery from the opening lows. Sandeep, your thoughts on the manufacturing space? I mean, there have been a lot of production-linked incentive schemes announced. We've seen a lot of chatter around the capex cycle finally reviving. Do you think there are themes that one can play around them? I mean, there's construction companies, there's cement companies, there's manufacturing companies.
So I think the manufacturing and capex revival is happening. It's a slow burn kind of event, meaning it will take 2023 to 25 kind of time period to gain strength. The good thing is that corporate leverage is low. Bank balance sheets are clean. We have the ammunition, we have the powder ready to fund the capex. But the memories of what had happened globally and in India are still very fresh. And therefore, this is something which clearly means that people will be cautious in 2023 in terms of capacity expansion. Yes, I would play that, definitely play the manufacturing sector and capex themes. We have liked L&T. We continue to like cement. So these are the two names. Also, I think the broader auto sector is also primed for definitely that this kind of longer rebound if the economic growth continues. So that's where we are.
All right, Sandeep. Thank you very much. Great speaking with you. Appreciate you joining in with all of that perspective. The finance minister is speaking at a FICCI event. Let's cut across.
Where countries are rapidly moving to adjust themselves with the nationally determined commitments, which are majorly going to impact on policy making, not just for India, for many other countries as well. Even with all this said, India has numbers which it can be looking at as a positive indicator for not just the government, but also for industries. I'll just put forth just one set of numbers and not go beyond that, because that is indicative of what is India's strength. I'm not talking about the macroeconomic fundamentals. All of you are quite well versed in the current position. For India, the current position is a position of strength. I don't need to highlight it again. But that one fact, which besides the macroeconomic fundamentals give us the strength, is a World Economic Forum data, which I think all of us will have to look at. And that reassures us that the 25 years to come, the Amrit Kal that Prime Minister Narendra Modi ji keeps talking about, has a lot more than what the name Amrit Kal just indicates, but it has got absolutely fundamental statistics that we need to know. And that is the World Economic Forum telling us that there shall be 140 million middle-income households added to India's economy by 2030, and 14 million high net worth individual households by 2030 again. That one set of data tells us where the market and its potential lies. An industry, after all, will have to look at from where it expects demand to generate from. And if that is the kind of size we are talking about, most often industry wonders where market of a scale exists. Market of a scale is very difficult to obtain by sheer aggregation from 10 different jurisdictions. But here is one India, which by 2030, and that is not my data, it is not any research group's data, it is the World Economic Forum, where all of us engage, you in your capacity and government in its own capacity, understanding how the spread of the economies are world over. So that is something which I think India's Amrit Kal is waiting for you to optimally utilize. And that's very directly linked to what you're looking for, demand generation. So that is something.
Right, so that is the finance minister addressing the gathering at the FICCI conference and also the media through her speech, talking about the prospects for the Indian economy. But another thing that talks about the economy itself is the auto space. That's a forward indicator. Uno Minda is a stock on our radar, a big mover. In fact, in just the last 2 years, the stock has rallied over 300%. 3 times is the returns that it's given. This morning as well, in an otherwise wobbly market, it's at the high point of trade. The management recently met analysts and reiterated that the company is, of course, well placed to outpace the underlying industry, and that's on account of increasing content per vehicle, market share gains, and EV adoption itself. So, to talk more about that, we do have with us the group CFO, Sunil Bohra, joining in. Sunil, thank you for joining in. Always a pleasure speaking with you. The 3 triggers that everyone's talking about is that you gaining market share, you increasing the content per vehicle, and you making a strong inroads into the electric vehicle space itself. So just wanted your thoughts specifically on these 3 things. What is your current content per vehicle? How much does it go up to? What is your current market share? What are you targeting? And electric vehicles, how much do they account for in your overall mix of things, and where do they go to?
Yeah. So first thing first, in terms of content per vehicle, as you would have seen that we have been consistently increasing our kit value across categories. I would not be able to give you a single number because the way we capture our content per vehicle is for a two-wheeler up to 100cc, 125cc and beyond, and A segment, B segment, C segment, and D segment in terms of PVs. So if you see past few years, we have consistently been improving our content per vehicle. And more importantly, if you see the products which we have, which are part of our top line, none of them is impacted because of any transition to EV. So from that perspective, our existing portfolio, has been agnostic to a IC engine or an EV engine. On top of it, there is a huge premiumization play in a lot of our products like your alloy wheels, your LED lamps, the electronic horns. So, and the switches kit value being consistently increasing, and telematics. There are a lot of products which are consistently being increased adaptation in the vehicle. Somewhere products which are in premium segment, now they are part of the base model itself, including like airbags, etc. So the existing kit value, as I said, has consistently been increasing across categories in the vehicles. On top of it, as you rightly mentioned, we have built our EV portfolio for two-wheeler and three-wheeler segment as a portfolio which is unparalleled in the industry. With the recent addition of motors with a joint venture with Bühler Motors of Germany, we have almost the entire bouquet of product except a few products like battery or a tire or a body where we don't have any intention to go. But excluding those, if you see, we have got almost the entire kit value from an EV perspective. So whenever this demand for EV grows, I think we will be ready to catch up the growth momentum. And that is what these things which we spoke about, be it the increased kit value, be it the premiumization theme, be it the EV adoption, etc. This is what gives us conviction that we should be consistently be able to outperform the industry in next 5 to 7 to 8 to 10 years, I would say.
Okay, so outperform the industry for the next 10 years. That's the next decade. Sunil, morning. Rima here. You've also indicated that EBITDA margins are going to improve for you, led by commodity deflation and improved profitability in your new product lines like sensors and two-wheeler alloy wheels. Can you tell us the margins that you're targeting, the number?
Yeah. So as you would have seen that last year to this year, we are improving margin by almost half a percentage point. But coming specifically to commodities, Rima, as you would have noted, when the commodities were like consistently going up, I think our endeavor always has been to how do we share that burden of the commodity price increases with our customers and pass that through fully, and we insulate our operating model. So when the commodities price come down, the benefit also gets passed on to our customers. So from that perspective, we have tried to insulate the company from the volatility of the commodity prices on an annual basis. Yes, quarterly there can be some impact, but on an annual basis, you would see will not have any significant impact of commodity prices going forward. So I think that has been our endeavor. On top of it, what gives us conviction to improve our margin profile is that the increased volumes, the operating leverage, and also some of the products where we believe the margins may be a little better. Otherwise, our broad guiding range for EBITDA margin for this year has been in the range of 11 to 12%. Last year we did, I think, 10.3, 10.4%. So from that perspective, I think we are still comfortable to achieve that range within the current fiscal year. Going forward, as you know that we are actually in a competitive world, while everybody would endeavor to improve their margins, but I would say that in the auto segment where we are in, I think 11 to 12% margin is a decent margin, and it's something we would like to consolidate and grow from there on in future.
All right, it will be interesting to see how much better can you grow from this 11 to 12% given the competition that you spoke about. At the same time, the supporting factors for margins would be higher value EV kits, etc., and higher valued products that you spoke about too. But can you share some numbers with us now? The first half, your revenues have been close to around that 5,400 crore mark. Year on year, of course, on a low base, it's a jump of 46%. What do you intend to end this year with? And you say that you target outperforming the industry over the next 4 to 5 years, perhaps even the decade. What kind of compounding growth can we expect in terms of your revenue over the next 5 years or so?
So our, you know that our revenue is linked to the industry growth. Our 90% of revenues actually go into the direct line fitment. So what we say is it's very difficult to say whether we'll grow 10%, 20% or 25 or 15. What we have been having our target is whatever industry grows, and we firmly believe India is in a sweet spot, as we just hear in our previous session also. India will continue to grow. So our endeavor has been whatever is the industry growth in terms of volumes, we should grow at least 1.5x of the industry growth in terms of our revenues. So I think that is the target which we have built for ourselves. And as I said, it will be very difficult to say how much that will have a compounding impact, but that is the target which we have set for ourselves.
EV is roughly 1.5% of your revenues only, right, Sunil?
1.5 times. So if industry grows, say 10%, our target is to grow 15. If industry grows
how much does EV contribute to your overall revenues right now?
Yeah. So as of now, EV, we know it's very, very small. So the revenue for, or the volumes for EV last month also, it was, I think, 3 to 4% of the total two-wheeler revenue. And if you see from Minda perspective, our 50% broadly, roughly revenue is two-wheeler, 50% is passenger vehicle. Yes, we do have CV, we do have three-wheeler, etc. I'm talking at a very, very high level. Of that 50% two-wheeler we have, it is only 3 to 4%. So overall pie, I think it's very, very small. So once we see some bump up there, I think that's where we see the growth in the EV vehicles. That will give us that additional delta. But as of now, it's a small number.
The orders from the EV two-wheelers or the passenger vehicles increasing at a faster pace? Are they asking you for more right now? And have you tied up with all the companies which are currently manufacturing EV vehicles? Or do you have some that you're talking to? Go ahead.
Yes, absolutely. You are right. So there are, the projections are definitely very good and promising, but as we say, they are all projections because the market also has to adopt the EV vehicle, giving whatever cost, range, the regulatory requirements you have. Recently, we saw the new requirement around battery, etc. So there are some industry also, as we know, has been improving, has been developing, and the market adoption definitely is something which we have to work on. But in terms of volume, yes, we are working internally. So to see that in terms of three-wheeler and two-wheeler segment, should see 30-40% kind of penetration in next 5 to 6 years.
All right, thanks a lot for that. MK has actually put out a note where they expect the company's EV division to do around 1,500 to 2,000 crores in the next 5 to 6 years. They're saying that this is currently small, but it will increase at a faster clip going ahead. The street was listening into what you had to say, and the stock has moved to the high point of trade. Thank you so much for joining in. That is the management of Uno Minda, guiding for 1.5 times growth as far as the industry versus the industry, and 11 to 12% sort of margin band is something that they aspire to sustain over the long term. With that, we slip into a short break. On the other side, we have the management of Credit Axis, Grameen, joining in to talk about their business outlook. We also have a conversation with S. Naren of ICICI Pru MF on the business outlook of the company and his promising investment ideas for 2023.